Hello, this is Steve Malone with Compass FX. I hope you're doing well today and you're getting some good trades. Today, let's simplify your trading. I know it's been pretty tough. The market's been range bound, a lot of up and down, a lot of chop. But if you'll step out, take a little bit more of a bird's eye view and remove all those intraday indicators and just look at the average daily range, you might get a sense of what to do in a range bound market. Take a look at the pound yen. We've seen the pound yen up and down. And a lot of pairs have been like this. But when you place the average daily range pro calculator on the chart, you can see that the market moved up to the weekly mid high, and then over the past couple of days it dropped. And where did it drop to? It dropped down to the weekly mid low. Now for those of you who already have the average daily range pro calculator, I'm going to ask you, are you using it? Remember, use this tool when the market is range bound. All you have to do is determine direction and see the market move to those levels. So as you can see here today, the market moved down pretty strong during the Asian session and it hit that level. Not only did I have my weekly mid-low level from Sunday night sitting here, we also had the daily low target sitting here. And look what the market did. Now the market's pushing back up here. I look for the market to possibly get back up towards the weekly open. If it does and continues to have strength, guess where I'm looking for it to go to? That's right, up to the weekly mid-high. Now you'll see this in other pairs. Look at the Kiwi dollar. The market opened up at the week, up to the weekly mid-high, no more energy going any higher, and look what it does. Comes back down the weekly open, makes one more attempt up, and then what's it eventually do? Comes all the way down, pins right at the weekly mid-low, and then bounces back up a little bit off of that. Possibly of a movement up, but if it falls and breaks, I'm going to be looking for it to possibly come down here to 81.84. As a matter of fact, I've mentioned to some folks in my trading room that I'm looking for it to possibly go down to right around that 81.80 area. Well, how did I figure that one out? The average daily range. Now, if you're sitting there going like, well, what's the average daily range? It's simply this. You take the daily high and you take the daily lows over a period of days. So let's say in this case I'm using the 5-day average daily range. So I've got the 5 daily highs average, the 5 daily lows average. And I do a calculation, it gives me target levels per day. But based upon the calculation over a period of time, I also have these weekly levels, a weekly high, a weekly mid-high, a weekly mid-low, and a weekly low. That's the range for the week based upon the cycle of price. Price has a tendency to cycle from high to low, back to high, back to low. Now sometimes it'll break out of its range and move higher or move lower, but then it settles back into a range again. I know there are times where the market's going to go beyond its weekly range. So what we incorporated in the average daily range pro calculator is 3 levels above the weekly high and 3 levels below the weekly high. And that's about 150% above the weekly range, 150% below the weekly range. And there's been oftentimes I've seen the market move all the way down to like the third extension low for the week and literally bounce and move back towards the weekly extension low number 1 or extension low number 2, and vice versa when it gets up really high. But what I'm getting at here is if you're having a tough time trying to figure out the trend of the market in a range-bound market, stop doing that to yourself. Step out, look at the average daily range, and consider there's 2 things that have to happen at a level, and only 2 things. Either the market's going to break through that level because of energy, strength in the market, maybe some economic event that pushes it through, or it's going to bounce. And if it bounces, it's going to go back towards another level or back towards, in this case, it went right back towards the weekly open. Okay, let's take a look at another chart. Now here's the Aussie dollar for the week. We started out, went right up pretty close to the weekly mid-high, and then fell back down and continued to fall, sat a little bit below the weekly open, and yesterday made a push down the weekly mid-low, which got tested here, market tested it, and then today we saw it drop down and sit right at the weekly low. This morning in my trade room, I'd mentioned to traders to look for the Aussie dollar to potentially move down in the neighborhood of 94.65 to 94.60 area. Well, where did I get that from? the average daily range. Let's take a look at the pound dollar. Look what it's done. Couldn't make it up, fell back over, sat, made another attempt up, then made its push down yesterday, bounced around, broke the weekly low, and look what it did today. After the London close today, it made a strong push down, and it's sitting right at that weekly extension low level. You can see that we've been in the euro dollar up and down, up and down. This is what a lot of people are struggling with, this up and down stuff and not really going anywhere. But look what it did from the weekly open back down to the weekly mid-low, and then finally it broke. Now today, because one of the ECB members, Nowotny, had mentioned that the possibility of a higher interest rate on the euro, we saw this big punch up. Where did it punch up to? Right back towards the weekly open. Then what did it do? Fell back down to the ADR mid-low, then continued to push all the way down and pin right at the weekly low. Folks, I can't make this stuff up. This works. So I'm going to remind some of y'all who have the average daily range pro calculator, pull it back out, dust it off, get it on your charts, and simplify your trading. Consider if it can't go higher, then it's got to go lower. If it can't go lower, then it's got to go higher. Where to? Look for it to go back towards the weekly open and the next ADR level. Let's take a look at one more and I'll wrap it up here. Here's the dollar yen. And this is a good example of what I'm getting at. Even we had a gap open. Where did the gap open to? It gapped open right to the weekly mid-high. Came off of it. And the interesting thing is it's been holding a level right above the close of last week. It's holding that. And so we get this push back and forth, back to the weekly mid-high, back down to that little floor we got here, and then it makes its punch. Today it made a strong move up, kind of back and forth in the middle of this, between the two, and I was looking for a push up to 98. I wasn't sure if it was going to get above 98, but I said that if it gets above 98, closes above 98, I'm looking for the potential for it to move up somewhere in the neighborhood of 98.40, 98.50 area. Well, look where that's at. That's right up here to the weekly extension high. One of the things to consider is it going to 99, and I had calculations showing it to go to 99, but check this out. The weekly third extension high is sitting right above 99. So there's the possibility that if we get continued dollar strength in the market or weakness in the yen and we break a level, I expect it to push higher. Well, look at what just happened. The average daily range, low target and high target just updated as I'm doing this video, going into the 5 p.m. Eastern hour, and based upon FXDD, the broker I'm using, that's their rollover. So you can see automatically that the daily low and high targets have updated. The 5-day average daily range is 64 pips, and the distance between these two is 64 pips. So as I'm doing this video, you get the update, and so I'm looking for, as I mentioned to folks in my trade room, I'm looking for the market to push up to that 98.40, 98.50 area. So I'll be looking for the market to push on up. As long as it maintains this upward trend line, then I'm going to be looking for the market to push on up and hit that target from the start of the Asian session this evening. If it drops back down, I'm going to look for it to test the weekly high. If the weekly high holds, then I'm going to be looking for another push up. If the weekly high breaks, I'm going to be then looking for the market to move to this target, and if it breaks that, then down to the weekly mid high. I'm attempting to keep my trading simple, and I'm using the average daily range pro calculator's daily targets and weekly targets to do that. So simplify your trading as best you can, and don't get caught up in the chop that's going on in this range-bound market. This is Dean Malone with Compass FX. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.